Hello, 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 and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. And using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets, cryptocurrency, businesses, real estate, cryptos, stock, save a failed 1031 exchange so you can create and preserve more wealth, defer 100% of the capital gains taxes, and make an impact with your wealth. Hey, I'm your host, Brett Swarts. In each episode, I am joined by some of the best real estate, financial, wealth, and sometimes financial and business model minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We are streaming on YouTube, by the way, and Facebook. And then we all drop our shows on iTunes. So subscribe to all of those places for the latest content. We're also streaming on Expert CRE Secrets as well, our other YouTube and podcast channels. So check that out as well. Hey, I'm excited about our next guest. He's out of the great state of Colorado, and he is on a mission to help us specifically with financial modeling, M&A and M&A consulting, and other resources when it comes to financial modeling. He's here to answer and help questions about how to do all of this. I mean, and to be honest, it's going to be a real learning opportunity for me as well. Please welcome to the show with me, Chris Reilly. Chris, how you doing?
I'm good. Thanks so much, Brett, for having me. I really appreciate it. I'm glad to be here.
Absolutely. And for our listeners who want to get in touch with Chris, you can go to financialmodelingeducation.com. That's financialmodelingeducation.com. Chris, would you give us a little bit more about your story and your current focus?
Yeah, sure. So I started working in New York City during the financial crisis back in 2009. I was in consulting at the time, and I started right on the Lehman Brothers bankruptcy. So it was a really interesting way to get my career going. Worked in that sort of bankruptcy field for a couple of years, and then I switched over to FP&A at Hilton Worldwide, based in Virginia, and I helped prepare them for their IPO in 2013. They were owned by Blackstone at the time. And while I was with Hilton, I got this real interest into private equity because of their Blackstone ownership. And so I taught myself the world of private equity in my free time. I taught myself to build these LBO or leveraged buyout financial models. And then I was fortunate enough to land a position at a smaller middle market shop out here in Denver. And middle market just means they invest in companies that are typically doing 250 million or less in revenue. And I spent a good chunk of my career doing that, middle market private equity, until about 2020. Then I decided to go out on my own and basically double down on the skill that I loved most in my PE days, which is building financial models. And so now I do a blend of two things. I do some individual contract work for companies that need FP&A help, as well as PE firms that need M&A modeling help. And then I also teach financial modeling independently, and basically teach everybody what I wish I had known when I first started. And so that is what I'm doing today.
Fantastic, Chris. Let's dive into the topic at hand, which is building intelligent financial and business models. So Chris, what would you say the number one secret is to doing just that?
Well, it actually starts with design principles. I don't know about everybody, but a lot of us have probably opened up an Excel sheet and seen that it's just a complete mess. There's tabs everywhere, there's data everywhere, there's broken links and broken stuff, and nobody really knows how to navigate a file. And unfortunately, a lot of that is because many of us are self-taught when it comes to building spreadsheets, building financial models. And so we ultimately learn the hard way, and we kind of put something together that, works well enough. We always wish it could be better, but it's at least good enough to get through. Does it have error checking? Maybe it does, maybe it doesn't. What this leads to is basically just poor design throughout. And so a good design structure for a financial model goes back to a fundamental of there's an input engine where you get raw data from like an accounting system. There's a calculation engine where you take that raw data and maybe manipulate it into some kind of forecast. And then there is an output engine, and that's purely just summary information that we're going to be passing along either to ourselves or to our team or something like that. And it's keeping those three engines intact and making sure that they are linking up correctly. And that's the essence of proper design. And if you can master that, then you can build a good financial model and get away from all the junk that is just very, very common to see from the smallest company in the world to even some of the biggest companies.
Okay, so it sounds like the proper design, the proper foundation, and balancing those three things and making sure those are fit, and then building from there. So, Chris, what's the number two secret to building intelligent financial and business models?
it would be keeping it simple. I think there's this need that we have to overcomplicate everything that we model out, and because there's all these line items in the business, and well, we better have a driver for this and a driver for this, and what happens is we end up going back to the same place, clutter and mess. And the truth is, most businesses, and just like a lot of things in life, they will follow the 80-20 principle, and there are 20% line items in the company that deliver 80% of the results. And so if you can isolate those and build a meaningful forecast for those pieces, then the rest can typically fall into place. So I think there's this need to overcomplicate for its own sake. And I've built some of those models. I'm not a perfect modeler, and you learn the hard way that it's just too much. And when you get better at it and you focus on just the things that move the needle, then you can have an efficient model that actually is a strategic tool and not some administrative burden that just slows you down every single month.
It makes perfect sense. And by the way, you can learn more about this by going to financialmodelingeducation.com. That's financialmodelingeducation.com. That if you can keep it simple and you can focus on what actually moves the needle at the top 20%, then it hopefully, simplifies it, makes it a tool, not just a burden. Is that a fair summary, Chris?
Yeah, and I mean to elaborate or be a little more specific, like if you think about a company, there are basically a few core levers. One is going to be your revenue. You're going to want to have a decent model for your revenue build. And then if you're an inventory company, where you're going to want to have some kind of model for your cost of goods sold so you can get an accurate gross margin. If you're software, you may not need that much for cost of goods sold because it's typically all below the line in OpEx. And then usually the largest expense for most companies is headcount. So you're going to want a meaningfully detailed schedule of all the people at the company. And then from there, it's one or two other line items, and that's kind of most of it. I mean, that's going to be your 80%. If it's a very capital intensive business that has a lot of capital spend, you're going to want a separate budget or module to build out your capital projects. But that, again, there's your 80% right there: revenue, gross profit, headcount, and capex. And that's going to give you a directional view, at least, on your cash. And that's the ultimate goal of the financial model, is to say, how much cash do we have? And then given these projections, what is our runway? So when I'm building models, that's what I'm focused on. I'm focused on those core things. And then everything else can kind of flow into place with a higher level assumption like inflation or percent of revenue or something like that. And then the details will always self-reveal as needed, if you feel like you don't have as much clarity as you need.
Okay, excellent. And that makes sense. So what's the number 3 secret to building an intelligent financial and business model?
Let's see. Well, those the first two are really the biggest ones. It's about the structure, and then the 80-20 rule. And then I think it's actually using it uh, to to tell a story, and also, and I think tell a story is very vague. I think it really means use it to actually get stuff done, because I think people like to look at the model and assume that the financial model is the business, when it's not. The financial model is just an abstract representation of theoretically what the business might be able to accomplish if real people actually go and do the work. So it needs to be a tool that we can use and say, okay, now we have some historical information as to what the business did, and we had some information as to what we thought it was going to do. Why is there a difference? And then what do we do next about it? And that's the operational side of the company, where we interpret the financial results, and then we go ahead and say, okay, now we've got to actually get stuff done. So I think it's decoupling from the model being the business to just remembering that it is more of a guidebook or a playbook for what the operators of the company actually have to go and do.
Okay, so that makes sense too. That's really helpful there. What would you say is the top person, that you are looking to help when it comes to your coaching? Because it looks like you have a financial modeling education, learn to build the exact financial models used with FP&A. Explain what that is, and private equity teams around the world. Walk us through, your unique, area that you serve.
So FP&A is short for financial planning and analysis. It's a relatively newish term. I'd say it wasn't used a ton about 10 years ago when I first got into it. And financial, or FP&A, and private equity, they really go hand in hand, because if you're going to be acquiring a company, then you need to make the financial projections for that company to figure out if it's going to be a return on the investment. And the investment is typically some blend of debt capital and equity capital. So they go hand in hand. And when I first started doing the coaching and the coursework, I thought that my ideal audience was a younger professional, maybe an analyst or an associate that was going to learn how to crunch these models and get into private equity. And I've learned from doing it a couple of years now that it's really everybody. I get a lot of business owners, a lot of CFOs, a lot of VP types that just want to hone the skills or bring it into as a training function for their firm. And then I also have a lot of analysts that are looking to either uh, perfect their skills in FP&A or maybe move from like a banking role into private equity. So it's really a pretty wide range of folks in finance. And I guess if I had to pick one, it would probably be that kind of junior to mid-level finance professional that really wants to hone the skills and move over to what's called the buy side, which is potentially buying companies in the form of private equity.
Yeah, fascinating. By the way, you can learn more all about this and Chris Reilly by going to financialmodelingeducation.com, financialmodelingeducation.com. So let's shift into that, right? So M&A, right? Buying companies, understanding, EBITDA, how to arrive at EBITDA, how to do all of these things that, are so important to evaluating businesses. Talk about, your approach to that and how you help people get clear on the numbers there.
So EBITDA is one of these metrics that's such a hot and cold thing in the world of finance, and a lot of people hate it, and I understand that. Because the real reason is because EBITDA is not part of GAAP, not part of GAAP accounting. And so what happens is you can start to get a little bit creative. Well, I'll say creative, but people really you get carried away with calculating what is my adjusted EBITDA, and people might think you're overly inflating your earnings or overly inflating your valuation, and that can definitely happen. I've seen that happen. What it's trying to do is just normalize the profitability of the company so that you can use it as a basis for the valuation. And what I mean by that is you need to strip out one-time or non-recurring expenses so that you as a potential new owner can just say to yourself, what do I think the approximate profitability of this company is going to be going forward? And so when I break down EBITDA, I usually like to break it into a couple schedules to keep things clear. And this would normally map what's called a Q of E or a quality of earnings, where you walk through the different EBITDA adjustments as you're modeling. And typically it starts with EBITDA as defined, which is the definition that I think most of us know, which is the earnings before the interest, the taxes, the depreciation, and the amortization. And that's like a baseline EBITDA that we can all agree on. And then from there, it's when we start to get a little bit carried away. It gets into what's called management adjustments, where they can pick one-time things that ideally are not going to occur again and do what's called add them back. So, like if they hired a consultant temporarily, that cost is going to be non-recurring. That's something they would add back to their EBITDA. And there's going to be a whole list of things that management wants to add. And as you increase the EBITDA, you potentially increase the valuation. And so that's where some of that friction comes from. And then lastly, there's adjustments on the diligence side. As a private equity firm, if you're going to be acquiring this company, there are all kinds of diligence costs that go into closing, like hiring lawyers and accountants and phase one surveys and whatever it may be. That all gets expensed to the company at close and results in a negative net income. But those are non-recurring costs, and so those are going to come back to EBITDA. And so we're going to build those back in what's called the diligence adjusted schedule. And so I've already talked through three sections. Again, it's non-GAAP, so you can see how people can get carried away when they really start to add all kinds of adjustments that don't necessarily need to be there, and that's the gripe. But again, big picture, we're trying to find normalized profitability so that we say to ourselves, all right, if we buy this company, is it actually going to generate a profit going forward so it can pay the interest that we're going to put on the company and then return the equity that we've invested?
Okay. Wow. That makes sense. And it's also a lot, right?
It's a lot. It's a lot.
It's a lot, but it makes sense. And I guess part of this is like hiring the who, not being the how, right?
Mhm.
So if someone wants to work with you, Chris, obviously they could take your courses. Sounds like. Oh, just tell us what are the ways they say they can work with you, right? Maybe hire you directly, work, coaching or hands-on group coaching. Like walk us through what that looks like.
Yeah, so I'd say the number one way is I do have a free email that kind of walks through all of my just skills that I've learned over my career, and that's at financialmodelingeducator.com. So that's a free way just to sign up, get to know me a little bit better. If you want to sharpen the skills, and again, it's tiered towards FP&A professionals and people that want to be in private equity, then financialmodelingeducation.com. Those are my self-study courses that people can enroll in. They've been featured in a lot of really well-known places like Wall Street Prep, and the Wharton Online Private Equity Certificate Program, as well as LinkedIn Learning. So that's something I'm really proud of. And then lastly, if you want to do individual consulting and work with me directly, I do have a separate business that does the consulting work, and that is actually called Mission Capital, and you can find that on missioncapitalco.com. And that's where I do the traditional work where I partner with an actual company and help them build out operating models, or if it's a private equity firm, I help them do M&A models. So it's really those two wings, the education and then the consulting piece.
Awesome. Love it, Chris. Love it, Chris. Well, let's shift a little bit into capital gains tax, if that's okay. Maybe we can geek out a little bit about this, right? So I'm curious, like in your experience, what would you find is the biggest frustration when it comes to exiting these highly appreciated, businesses, these M&A mergers and acquisitions are happening, and all this tax, right? What is your thought process when it comes through that, and or 1031 exchanges, or the different things that are associated with tax?
Well, I'd say in truth, I am not a tax professional, and so when I was heavy on the buy side and doing the PE work, we would often bring in a professional to really analyze the tax implications of the deal, because on the business side, I was more about the P&L and L and the balance sheet modeling, and then the tax pros as well as the legal team would kind of help us optimize the structure. But effectively, what we would be doing is we would look to either do a stock sale or an asset sale, because there are some tax advantages to doing an asset sale where you can get the kind of the step up in basis for the fixed assets, and then you get an incremental depreciation over the life of the deal. But then sometimes you're also creating deferred tax liabilities or deferred tax assets, which can be a little bit complicated from a modeling and kind of realization perspective. But overall, what you're really trying to do is just optimize the company so that it is tax efficient on exit. And this is going a little bit beyond my expertise, but a lot of the entities that we would set up would be tax efficient in such a way that at least the LPs came out with the most tax efficient strategy. And that would sort of vary based on where the company was located or based on the structure of the deal. So I wish I was a little bit more of an expert on that, but I always had I would say expert help when it came to putting the tax structure together.
Absolutely. That's why I encourage everyone to build a capital gains tax exit plan, and to build a dream team for not only the building of your company and the modeling and the projections and the cash flows and everything else there, and properly pricing your company based upon key financial models, but also when you go to exit. And that's why we wrote the book called Building a Capital Gains Tax Exit Plan. It's all about exiting multi-million-dollar assets, deferring the capital gains tax, and eliminating the estate tax, because it's painful if you work so hard to build that company for 5, 10, 15, 20 years just to have a lot of it wiped out with tax. You want to make sure you have a plan in place. Go to capitalgainstaxsolutions.com or check out the book on Amazon, Building a Capital Gains Tax Exit Plan. That being said, Chris, are you ready for the lightning round?
Sure. Yeah.
All right. Knowing what you know now, if you could go back to your 20-year-old self, what's the one golden nugget and make sure you tell yourself to do?
Oh man. Goodness. Make sure you spend some time focusing on things outside of work, like family and building quality relationships. You have plenty of runway to make a career down the road. Make sure to live in the present.
Absolutely love that. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
I like The Go Giver. The author is escaping me, but I just really like the business philosophy of basically giving more in value than you receive in payment, and some of the authenticity that book talks about. And I try to emulate as best I can in my business.
Absolutely love that book as well. Question number 3, what are you most curious about right now?
What am I most curious about? I think, personally, just sustaining my business for the long term. As a solopreneur, just kind of like break the fourth wall a little bit. There's a lot of work that goes into building a one-person business, and even though it lends itself to a wonderful lifestyle that I appreciate with my family, there's always concern of like, is it going to last? And I would just love to know continually how to work on that so that my company becomes defensive and has some long-term value.
Fantastic. Second to last question, or actually, let's go to the AI question. How are you using ChatGPT to do financial modeling or grow your business, or some of the key things that you're finding that it's most useful for?
So right now, everything that I do is still human-led, which is such an interesting term to say out loud, but I will use ChatGPT to help me double check some concepts, especially when it comes to like accounting. If I want to double check, hey, am I thinking about this right? Or if I want to cover a topic in a little bit more detail, I might say, hey, this is a post that I'm working on, and can you help me fill in a couple gaps? And then I always will put my own spin on it. That's on the content side. For financial modeling, it still seems to be not all that great. I mean, I've tried to have it come up with fake data for fake companies that I could put together to build hypothetical models. Frankly doesn't do a great job of that. I've had to build a couple depreciation schedules, wasn't great, but that's not to say that it won't become excellent. I've also seen some people build out fairly basic LBO models done by year. I've also seen it build out DCF, or what are called discounted cash flow models, automatically. So I think right now the skill is really in prompting and giving it good instruction, and then later on it's going to become pretty seamless. But so I'd say I mostly use it on the content side and less so on the modeling side for now.
Excellent. Our second to last question. Number one leadership quote or theme that you strive to live by.
Oh man, I wish I had more time to think about that. Well, the first one that came to my head just now is know when to say when. I don't know if that's necessarily a leadership quote, but it's a quote from an old friend of mine. It was a quote of his dad's, and I think it's just a nice way to know when you have enough. I think we always pursue more in our lives, and knowing when to say when is a nice way to just keep yourself grounded.
Excellent. Love that. Yeah. Contentment and knowing when to say when. Last question. After all your success, helping all the people you've helped, how do you best stay centered, Chris, in your values and stay encouraged to charge forward to reach even higher heights?
I'm continually motivated just by time with my family, time with my kids, and that keeps me going every day. I've worked a lot of really wonderful jobs. I didn't escape any rat race. I think people like to say they escaped working with rats. I don't think that's like a nice way to talk about former colleagues. I had great relationships with them, but I worked a lot of long and difficult hours, and working as my own as a solopreneur. I'm home with my family, I'm home with my kids, and so I'm taking them to school and I'm picking them up every day, and that always keeps me going even on tough days.
Amazing. Hey, Chris, I want to thank you for being on the show. I want to thank you for sharing us with tons of wisdom. And I want to encourage you to continue to help people structure and design their numbers, their modeling, their businesses, and their lives, right? By keeping it simple and understanding that numbers do play a huge role in this, everything that we're doing every single day, and keep blessing and help people with their businesses, with their exits, with evaluating businesses, all of the above. For our listeners who want to get in touch with you, remind them one last time, what's the best place for them to find you?
Financialmodelingeducation.com.
Fantastic. And I also want to thank our listeners for listening to an episode of the Capital Gains Tax Solutions Podcast, also stream on Expert CRE Seekers Podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to create and preserve more wealth when exiting highly appreciated assets, crypto, businesses, real estate, stock. We have a solution for you. You can learn all about it by going to capitalgainstaxsolutions.com, or also checking out the book, Building a Capital Gains Tax Exit Plan, on Amazon, hit #1 bestseller. We have people like Kevin Harrington from Shark Tank in the book, which is pretty cool. Check that out, Building a Capital Gains Tax Exit Plan. Please rate, review, subscribe, share this with someone who can be of help to today. We so appreciate it. We'll talk to you again real soon.